And joining me to unpack the performance in greater detail is a company CEO, Tjaart Kruger. Tjaart, thank you so much for your time and a good afternoon to you.
Good afternoon. Thank you.
Wonderful. Like I would have said, we are seeing a slight fall in revenue here, but we've still managed to see growth in HEPS. Let's talk about that income statement and how you've managed it over this period.
I think there's a few issues to mention. It's a couple of our businesses, home care, personal care, snacks and treats. The export business, TPI, has actually performed quite well. And we've struggled in our grains business, which includes our bakery business, probably the major business where we have really struggled in the past 6 months with not so much market conditions, but rather we have to go into a turnaround strategy to turn the business around. We've got too many internal problems in the business, and our big goal there is to address all of those and turn those businesses around. And that's also the green shoots we're referring to, which we are seeing at the moment, where we will certainly see some improvement in the performance of the bakeries.
Tjaart, what we know is that Tiger Brands products are often characterized as premium in the South African markets. We know that this is a time when, of course, South Africans are battling with their own personal finances. Let's talk about that and even the inflation that Tiger Brands has then had to contend with as a result.
Yeah, there's been the official inflation rate in the country has come down and it's stabilized quite nicely. Agricultural food products inflation is still relatively high, so we have to contend with that. The rice price is very high. The maize price has gone over 5,000 rand a ton because of the drought. We have to contend with that. But I would rather, on your first part of your question, is our products are expensive in the market, and that is very true. We have to get to a point where we can run the business in such an efficient way through procuring well, being low cost from a manufacturing point of view, that we can put our brands on the shelf at a very competitive price that's affordable to our consumer. That's a big goal of ours to do that.
I'm also keen then to speak on what we are seeing in terms of expansion in the business. We know that there's been an opening of a new peanut butter factory there, but what does that look like, Tjaart? And maybe speaking into the strategy that you make mention here of manufacturing cheaper.
So let me use the peanut butter factory as the proxy for what we're doing in the whole group, because I think it's relevant. So we built the new peanut butter factory, much more efficient. So the throughput is at a much better level than the old plant, and the flexibility in the plant gives us the ability to pack in glass, pack in PET, and it gives us flexibility to do mixes where we can pack various variants of the product, and that's exactly what we're doing. So you'll see by the end of the year, we'll have 3 basic variants in peanut butter. We'll have a 99% peanut inclusion, a 91% peanut inclusion, and then a much lower level of peanut inclusion. And those products will come at different price points. All very good, all consumer researched, all approved by the consumer. And then the consumer can choose if they want to buy the more expensive variant or whether they want to buy the cheaper variant. And I think that approach in our whole business is what we need to do. We need to get a variant on the shelf that's affordable to a cash-strapped consumer.
It will be interesting to see that played out, Tjaart. Also, can you talk on the balance sheet right now and how you believe that is faring, maybe looking also at the debt in the books of Tiger Brands right now?
Yeah, the balance sheet is strong. We've got a very strong balance sheet. We have got a bit of gearing, but the gearing is not close to where an optimal gearing would be. So rather than being cash strapped, we probably have got some serious decisions to make in terms of what we do with the cash as we generate it on an annual basis. And we have developed a capital allocation model in terms of that we can take very good informed decisions on how we spend money on capex, how we spend money on dividend, what dividend cover we need to have, and then how and when and if we buy back shares, we pay special dividends. So that model we've developed, and that's how we will drive the business going forward.
I also want to touch there just on then the overall restructure chart and also looking at the timelines that can be anticipated. Of course, in the short time that you've been there already, you've done quite a bit. How long can we expect the restructure to work its way through the rest of the group?
Look, the structure is in place. We've got the six MDs with their businesses. Their structures are in place. In the bakeries, we're still structuring a little bit lower down. But I think there's two things here. The structure is in place, and the guys are busy, really focusing on operating. And I think the second point is that you look at structures all the time, how it can improve, how it can become more efficient. So that will never stop. We will always do that. But if you look at the big restructuring that I announced in December when we had these meetings or these results presentations, that restructuring and the creation of the new operating model is in place. The guys are in the jobs and they are busy focusing and really starting to deliver results.
What we're also seeing at Tiger Brands here is maybe a little bit of strain in both retail and wholesale Tjaart. I'm keen just to get your thoughts on this one, and what that might mean for the whole FMCG space, that there is both pressure at the retail point and at the wholesale point.
Yeah, we call that route to market. So in our route to market, we've got what we call the retail market, and we call the general trade or the informal market. And you've got the wholesalers serving the informal market, and you've obviously the retailers in the retail space. Retailers are also trying to get into that informal market. And you'll see that if you look at all the big townships, there's lots of the retailer stores there. So the retailers are penetrating that market. And we've got two big projects. In the bakeries, we're doing a lot of work on how we get to the general trade in a more efficient way. We're not doing it very efficiently at the moment. We're looking at geolocating customers, looking at routing, looking at technology, how we route our trucks. We're looking at our footprint, how many depots do we need? Do we need all the depots we have at the moment? I don't think so. And then we look at our routing. How do we do routing to get the most efficient delivery method and getting to our customers in time? And then lastly, how do we incentivize our drivers? Because they don't deliver to the informal market, they sell. And they need to be incentivized to do that optimally. So that's the one leg. The other leg is with the rest of our basket. We have started about 2 years ago with a program on going into the general trade with a structured appointment of distributors and putting salespeople into the market where they can go to all the small stores, place orders on an app, and then the product get delivered by these distributors using that technology and getting pulled through into the market. And that is also working quite well. It's slow because it's big investment. It's lots of people and it's lots of overhead. And we don't want to end up with a huge overhead that doesn't work. So we're going rather slower than quicker. But it's really, we're ahead of target where we want to be. So that seems to be working quite well.
And before I let you go, I'm also keen to get your thoughts just on the overall macros here in South Africa. Of course, we've got this election coming up, Tjaart, and it will be behind us in a few days. And I'm wondering what you are then hoping to see from South Africa that might even make Tiger Brands operate a little bit better.
Look, the consumer is cash strapped. Our interest rates are very high. We need to see a reduction in our interest rates very soon, and that will release quite a bit of spending power with our consumers. We at Tiger Brands have got the wonderful privilege that we work with all these massive brands that people don't go without. I mean, everybody eats our All Gold tomato sauce, our Black Cat peanut butter, etc., etc. So if we can get those products, and we will, to be affordable to our consumers, they all eat it, and even the cash-strapped consumer eat our products. And we're under no illusion that it's going to be tough going forward, but we're used to that. We must just learn and be very able to operate in that environment.
Well, Tjaart, it's been a pleasure hearing from you. Thank you so much for taking us through the set of numbers. That was Tiger Brands CEO, Tjaart Kruger.